Hello students, so up to segment 7 we have completed. Now we are going to start with segment 8, that is composition scheme under GST. So this is in your volume 2. So you would have received volume 2 book now, and in that volume 2 book this composition scheme is there. What is this composition scheme about? See, listen. What happens when there is a person who is having a limited turnover? He is required to pay GST and he need to comply with lot of provisions of the law. When he is required to comply with lot of provisions of the law, his compliance cost will increase. So in order to reduce the compliance cost, so what is that he need to do? He need to get some relaxations. Moreover, when he charges GST to the customer may not be interested to buy from him because he is charging GST to the customer. Let's take an example. Now I am conducting classes for you, and if I am charging GST to you, definitely you will not be willing to pay because you are consumer. For you, GST is nothing but a cost. So therefore, naturally what you will do, you will try to go to a place where, of course, if the quality remains the same, if another faculty is also taking like me, so you will go to that faculty because their GST cost is not there. So what is the objective here? A consumer feels tax as burden. A consumer feels tax as burden. So to avoid that scenario, so what this government has done, they have implemented a scheme called as composition scheme, wherein so you don't have to collect GST from the customer. So therefore you are a registered person. Being a registered person, you are not collecting GST from the customer. So which means that should we pay GST to government or not? Yes, we need to pay GST to government. That is, I am a dealer opting for composition scheme, and I will not be collecting GST from you, but I have to pay some GST to the government, which is not the normal rates but at the concessional rate. So therefore, advantage to the consumer, the cost will come down because I am not charging GST to the consumer. Then what will happen because of that? My sales will increase. And when my sales increases, then I will be getting profit, increase in profit on account of increase in sales, not on account of increase in the selling price or increase in the contribution, nothing like that. So because the volume increases, my profit will increase. But if you see profit per unit, that will come down. How profit per unit will come down? Because when I am not collecting GST from you, I have to pay GST out of my pocket, means to that extent my profit has come down. Second, I cannot take ITC on my inward supplies. When I cannot take ITC on my inward supplies, naturally this when ITC is not available, then my purchase price will increase. The purchase cost will increase. When purchase cost increases, to that extent again there is a decrease in the profit. So therefore, per unit or per sale, if you see the profit will come down. So let's try to understand this with the help of an example as to what is the difference between a normal scheme and a composition scheme in respect of profit per unit. Let's take Mr. X and Mr. Y. There are two people, Mr. X and Mr. Y. Mr. X is opting for normal scheme. And Mr. Y is opting for composition scheme. Mr. X is opting for normal scheme and Mr. Y is opting for composition scheme. Now let's take the purchase price here. Purchase price, say 1000 rupees is the purchase price plus GST of 120. This is under normal scheme. Whereas under composition scheme, same 1000 and we have GST rupees 120. Whereas what will be the cost of purchase? So under normal scheme, the cost of purchase is not 1120, it is only 1000. Why the cost of purchase is only 1000? Because this 120 can be taken as ITC. This 120 can be taken as ITC. Whereas here, what will be the cost of purchase? It is 1120 is the cost of purchase. Why 1120 is the cost of purchase? Because this 120 cannot be availed as ITC. ITC not available. ITC not available. Because of that reason, that ITC is not available, the cost will become 1120. So what is the one important point that you have learned in composition scheme? Whenever you are opting for composition scheme, you cannot avail ITC on your inward supplies. Whenever you are opting for composition scheme, you cannot avail ITC on your inward supplies. Now what happens? You make a value, that is sale price. So this is the cost of purchase price or cost of purchase, anyway you can take. Now let's take the sale price. The sale price will remain the same. There is no change in the sale price of the product. The price will remain the same. So sale price is say 2000 and 2000. Can we charge GST to the customer under normal scheme? Yes, we can charge GST to the customer under normal scheme. Add GST, say 240 rupees is the GST. So assuming 12%, I made it same. So 240 is the GST. Now under composition scheme, what will be the GST? Can we recover GST from the customer? No, we cannot recover GST from the customer. GST should not be collected from the customer in case of composition scheme, which means what will be the price that is collected from the customer? Amount collected from customer. Amount collected from customer, or in other words, cost to customer. So what is that? It is 2240. So it is 2240. That is the cost to the customer. Now here it will be only 2000. So this is the cost to customer. Amount collected from the customer or cost to the customer is only 2000. Now let's determine the profitability here. So what is that profitability? Profitability. This is per unit. Profitability per unit. So if you see here, how much is the GST burden on me? I don't have any GST burden. How I don't have any GST burden? Come on, can you tell me why I don't have any GST burden? 240 I am collecting from the customer. 240 I am collecting from the customer. And 120 already invested at the time of purchase, now recovered. So balance 120 I will pay to the government, which means nothing I am paying out of my pocket. So therefore, what will be the profitability per unit? 2000 rupees minus 1000 rupees. 2000 minus 1000, that will be my profitability, that is equal to 1000. That will be my profitability. What about the net GST payable? Net GST payable is rupees 240, that is the GST which I am collecting from the customer, and minus 120 I have credit. So therefore that is equals to 120 is the net GST that I am paying to the government, which means what is the profitability per unit? I got 1000 rupees as profitability per unit. You understood the normal scheme? Now let's go to the composition scheme. Under composition scheme, what will be the profitability per unit? Now how much I am getting? 2000 minus I need to pay GST out of my pocket. I have to pay GST out of my pocket because I am under composition scheme, but I don't have to pay 12%, assuming that this is the case of a trader. So who is Mr. X and Mr. Y? Mr. X and Mr. Y is a trader. Mr. X and Mr. Y is a trader. So X is not opting for composition scheme, he is under normal scheme, and Y is opting for composition scheme. So now what will be the rate? Is it 12%? No, it is not 12%. A concessional rate 1% on what? 1% on the turnover. So here what is the turnover? 2000 is the turnover minus 1%. So minus 2000 into 1%. 2000 into 1%. So this is nothing but the GST here. This is nothing but the GST minus purchase price. So should we take purchase price as 1000 or 1120? 1120 because ITC not available. So therefore what will happen to the profit? It is 2000 minus 1% of the 2000 and then minus 1120, that comes to rupees 860. Rupees 860 is the profit per unit. And what is the net GST payable? Net GST payable is 2000 into 1%, that is 20 rupees is only GST payable. ITC and all is not available. And now if you see here what has just happened here, 1000 rupees is the profitability per unit, whereas here it is 860 per unit. So there is a decrease in the profit per unit when you go into composition scheme. Definitely that will happen. Definitely that will happen, because there are two disadvantages of composition scheme. What are those two disadvantages of composition scheme? Number one, you cannot recover the GST from the customer. Number two, whatever ITC that is there, you cannot take it as credit, which means that whatever credit you have paid is loss. That is one loss. You cannot recover the GST from the customer, but you have to pay out of your pocket. That is another loss, which means that definitely profitability per unit will come down under composition scheme. Then sir, what is the advantage? Why the hell I need to go for composition scheme? Very simple dear. That is, because I am going into composition scheme, you are consumer here. What happened to your cost? What happened to your cost? The cost has come down. So from 2240 rupees, it has come down to 2000 rupees. The cost has come down. So therefore, as a consumer, you will definitely prefer going and purchasing it from a person who is opting for composition scheme. Then what happens to his sales? His sales volume will increase. Suppose if there is a person who is not opting for composition scheme, and if the sales volume is say 1000 units here, so here it is 1000 units, whereas because he is opting for composition scheme, another person is opting for composition scheme, definitely the sales volume will increase. And say if that goes to 1400 units, 1400 units. Now see the profitability. So what is the profit? Total profit. What is the total profit? So 1000 into 1000. So that is 10 lakhs. Whereas here it is 1400 into 860. That is rupees 12 lakh 4000. So here it is 10 lakhs and there it is 12 lakh 4000. So the profit has increased, yes or no? Here the profit is 10 lakhs, here the profit is 12 lakh 4000. The profit has just increased, therefore I should be going for composition scheme because my volume increases. What if the volume has increased? The volume has increased but not that great. For example, what if the sales volume is here 1000 units, but here it is 1200 units. Then what will be the total profit? Total profit, if you see, here it will be 10 lakhs. Here it will be 10 lakhs, whereas here it will be 1200 into 860, that comes to again 10 lakh 32,000. So therefore still composition scheme is best. Why composition scheme is best? There is a marginal increase in the profit. Now what if it is 1100 units? You can see 860 into 1100 units is 9,46,000 only. So therefore it is not feasible to be into composition scheme because there is a small increase in the volume. So now tell me friends, what is the advantage of composition scheme? Two disadvantages we discussed. What are the two disadvantages of composition scheme? Number one, ITC not available, because of which the purchase price increases and the profit per unit decreases. That is point number one, this first disadvantage. Second disadvantage, GST is payable out of the pocket of the dealer and that cannot be recovered from the consumer. Then that is the second disadvantage, because of which the profit per unit will come down. Then what is the advantage? Because of composition scheme, the cost to consumer will come down, because of which the sales volume will increase, and because of increase in the sales volume, the total profit will increase. Therefore it is justifiable to go for composition scheme only when there is an increase in the sales volume, otherwise it is of no use. Is it clear? So when you are a dealer who is having limited sales, whether the price increases or decreases, so price inelasticity, that is when the price increases or decreases, there is no change in the sales volume, then there is no point in going into composition scheme. You will be literally bleeding. That's it. And now let's try to understand. For example, sir, there is a shop in your nearest locality, and there are two shops, for example. Now two shops, they are charging GST and you don't have any difference. Say one shop which is charging GST in your nearest locality, and another shop which is not charging GST, but it is little far away, definitely you will go to that shop which is nearer, because there another factor is predominantly playing, that is time. So I have to buy that. So then that shop which is far away from your house or far away from your location, definitely that sales they have missed, even if they are not into a normal scheme, that they are into composition scheme, there is no benefit that they have derived because of that. So therefore many other factors will also be playing here. Then another $1 million question that you will get. So what if the product is under MRP? What if the product is under MRP? Then MRP is inclusive of all taxes. MRP is inclusive of all taxes, which means that there is a provision which says that when you are under composition scheme, you are not supposed to collect GST from the customer. There is one point. When you are under composition scheme, you are not supposed to collect GST from the customer. But sir, when I am selling at MRP, I am collecting GST from the customer, right? But literally here on that MRP, even though it is inclusive of taxes, on the entire MRP you will be paying that 1% or 5% the composite tax out of your profit. So therefore, which means that there is no clear-cut clarification in this regard. But what entirely people are doing is that they take MRP of the product, on that MRP they will multiply that percentage and they will be paying. But really speaking, there should be a different kind of working that should be adopted whenever the product is under MRP. That is, in true sense, literal interpretation of the law if you make, then in case of MRP based products, we need to adopt a methodology. I'll tell you how it works. Now, there is a dealer who is opting for composition scheme. So there is a dealer who is under composition scheme, and that dealer will be making purchases and he will be making sales at MRP. Okay, so MRP of the product is 1500 is the MRP of the product, maximum retail price inclusive of all taxes. So this is the MRP of the product. Now what is the purchase price? What is the purchase price? That purchase price is, say, 1000, and even though this dealer is opting for composition scheme, his supplier may not be opting for composition scheme. One trader is opting for composition scheme, but a wholesaler may not opt for composition scheme, or a manufacturer may not opt for composition scheme. That is, his particular wholesaler or his particular manufacturer is not opting for composition scheme, which means that definitely he need to pay GST, and that cannot be taken as ITC. So therefore, say 120 rupees is the GST component. GST component. How, sir, it will come? Because supplier of such dealer did not opt for composition scheme, due to that reason. Supplier of such a did not opt for composition scheme, and supplier of such dealer did not opt for composition scheme, then ITC is not available, and I mean GST is payable, and that cannot be taken as ITC. So this is your purchase price. So what will be the purchase price? That is 1120 is the purchase price. Now this MRP is also inclusive of GST. This MRP is also inclusive of GST, 1500, because whenever we say the word MRP, then that is inclusive of all taxes. What is his value addition? His value addition, whose value addition? The dealer is there na, who opted for composition scheme. The dealer who opted for composition scheme, what is his value addition here? His value addition is nothing but 1500 minus 1120, that is the value addition of the dealer, and 1500 minus 1120 equals to 380 is the value addition, but that 380 is inclusive of GST, which he is collecting from the customer. This 380 is inclusive of GST, which is collecting from the customer. But when there is a person who is opting for composition scheme, he should not collect GST from the customer. Which means that what he need to do, he need to take out the GST component. So GST component equals to 380 into 12 divided by 112, assuming the rate of GST as 12%. So rate of GST I am taking as 12%. So assuming that case, so therefore what will be the GST component here? That is equals to 380 into 12 divided by 112, that is 40.71. 40.71 will be the GST component. To that extent he should reduce the MRP. Therefore, what should be the price charged to customer? The price charged to customer equals to MRP minus GST component on value addition. So what is the MRP? The MRP is 1500 minus GST component on value addition is 40.71, that is equals to, so 1500 minus 40.71, 1459.3. 1459, it's 1459.3 should be taken as the price that should be charged to the customer. This is the real case, in the sense, if you go for literal interpretation of the law, this is how you should do. But you know what is happening now? They will take 1500 as the MRP, they will collect 1500, out of that 1500 they will multiply 1% and they will pay, and now actually they need not to pay 1500 into 1%. What they need to pay is 1459.3 into 1% is what they need to pay, but they will be paying 1500 into 1%, and maybe government gets more revenue, so they are thinking like it's okay, chalta. And but actually speaking, that is not correct here, because what happens here, 1459.3 should be the price that is collected. Why? Because GST should not be recovered from the customer. But sir, this big computation they will do, sir, every trader will do. No, here it is just an equation, very simple. That is, you take MRP and you take purchase price, MRP minus purchase price into 100 divided by 112. That should be the value addition. Now you add it back to the purchase price, or into 12 divided by 112 you take out of the MRP. That's simple. So for explaining I gave this big way, otherwise it is very simple. So that is 1500 MRP. 1500 MRP. From this 1500 minus, we will take out the purchase price 1120. Out of that we need to get, we will get a value addition, and we need to take the GST component. 12 divided by 112, that comes to 40.71. This is one equation which is there, one column, and MRP is on the other column, GST on MRP is on the other column. Now what should be the sale price? That is a third column. So therefore MRP 1500. So 1500 minus GST on MRP. So you will be getting the sale price, which is 1459.3. So the accounting software will take care. So whenever there is a MRP that is fed into the system, along with that the purchase price should also be fed into the system, so that it will take what is the MRP, what is the purchase price, accordingly the calculation will be done, and in the bill it will be 1459.3. That's it. So therefore this is how it should be followed, but there is no clarification in this regard for this purpose. Now whatever I have just discussed with you is in the context of how composition scheme will be beneficial. So I did not go into the composition scheme yet. I just explained you what is composition scheme. I have not started yet what is the provisions of composition scheme. I just gave you the simple explanation or understanding what you should be having about composition scheme. Now let's proceed to the detailed provisions of composition scheme, which we have in section 10 of CGST Act. Section 10 of CGST Act deals with composition scheme, and for your November 20 exam, completely this composition scheme got revamped. Lot of changes are there when it comes to composition scheme. Completely it got revamped for your November 20 exam, and therefore that we are discussing now. And even for May 21 also it will be the same. There is no change in the composition scheme, unless otherwise for this next few months if we have got any notification, otherwise it will be the same path. Now look into page number 8.1. Page number 8.1, segment 8, composition scheme. See this updated composition scheme under section 10 on account of various amendments made with Finance Act 2019. So these amendments are with effect from 1/1/2020. So they have previously by notification Finance Act 2019, they have not given the effective date. So they have given the effective date as 1/1/2020, and completely it got revamped. It does not mean completely it got changed. It is the same thing. There is no change in this scheme as such, but there are a lot of inconveniences in doing the computation, understanding. There are many confusions, so they have weeded out those confusions. That is the advantage of these amendments whatever they have made. Now look into this section 10 subsection 1. I am just reading the bare act once, and thereafter let's do the analysis part. First, section 10 subsection 1 says, notwithstanding anything contrary contained in the act, but subject to the provisions of subsection 3 and 4 of 9. What is 9.3 and 9.4? Liability to pay GST under RCM. A registered person whose aggregate turnover in the preceding financial year did not exceed 50 lakh rupees may opt to pay in lieu of the tax payable under him under subsection 1 of section 9 an amount calculated at such rate as may be prescribed, but not exceeding 1% of the turnover in a state or turnover in a union territory in case of manufacturer. So in case of a manufacturer it will be 1% of turnover. In case of a person engaged in making supplies referred to in clause B of paragraph 6 of schedule 2, 2.5% of the turnover in the state or turnover in union territory. 0.5% of the turnover in the state or turnover in the union territory in case of other suppliers. So that is in case of traders. Now what does it says? That is section 10 subsection 1 says, notwithstanding anything contrary contained in this act, but subject to the provisions of section 9.3 and 9.4, which means that when you are a person who is opting for composition scheme, you made some inward supplies on which you need to pay GST under RCM. Now that particular GST under RCM you need to pay at the rate of 1% which is applicable to you, or at the normal rate. Again I am repeating the question, carefully listen. You are a person opting for composition scheme. You made some inward supplies on which you are required to pay GST under RCM. Up to that clear? Now to pay that GST under RCM, whether you need to take the normal rate or the rate of composite tax that is applicable to you, because when you are under composition scheme a special rate is applicable to you, whether you need to take the special rate or you need to take the normal rate. We need to take normal rate, because what is the words that is used? Subject to, notwithstanding anything contrary under the act, but subject to the provisions of section 9.3 and 9.4, which means whenever it is under RCM you need to pay GST, treat it separately, you pay GST at the normal rate even though you are under composition scheme. That is the point there. A registered person. So 10 subsection 1 emphasizes on registered person, which means if you want to opt for composition scheme you should be a registered person. If you want to opt for composition scheme, you should be a registered person. So that is the point here. So what is the first thing? First thing is that subject to the provisions of subsection 3 and 4 of section 9. A registered person whose aggregate turnover in the preceding financial year, again a registered person whose aggregate turnover in the preceding financial year, actually in the law it is given as 50 lakhs per, but that has been extended to 1.5 crores, because if you look into the first proviso to section 10 subsection 1, provided that you look into this paragraph, provided that government may by notification increase the said limit of 50 lakhs to such higher amount not exceeding 1.5 crores, 1 crore and 50 lakh rupees, as recommended by the council. Accordingly, the limit for composition scheme is 1.5 crores. So what is that? Previous year, preceding financial year, if it does not exceed 1.5 crores, may opt to pay, very, very important, may opt to pay. What does it mean? It means that it is not mandatory, may opt to pay, which means that it is not mandatory, it is optional. If you want to go for composition scheme, you go, otherwise you don't have to. So who is allowed to go for composition scheme under this subsection 1? A person whose aggregate turnover during previous year does not exceed 1.5 crores, even though it is given as 50 lakhs, but government has power to increase on the recommendations of the council to 1.5 crores. Accordingly, it is increased. So therefore, during the previous year, whose aggregate turnover, what is the word that is used? Whose aggregate turnover in the preceding financial year, note that, whose aggregate turnover in the financial year, preceding financial year, they did not use the word turnover, they used the word aggregate turnover. Whereas when they determine the rate of composite tax, they use the word turnover. See here, turnover, they use the word turnover, they did not use the word aggregate turnover. So turnover in the state or union territory is different from aggregate turnover. These are two different turnovers that is there under composition scheme. Without knowing this, many students will try to interpret wrongly, even many faculties also will interpret it wrongly. So it is aggregate turnover and turnover in a state or union territory. Now that aggregate turnover should be checked for determining the eligibility to opt for composition scheme. Once you have opted for composition scheme, thereafter you need to take the turnover during the current year, and then you need to calculate that 1% or 5% as the case may be. How 5% we have got? Actually in IR, I'll tell you that rates later, but try to understand that this, because I wanted to explain to you the difference between aggregate turnover and turnover, I just gave you this clarity, and that rate we will see little later. And this is optional. If you want, you go, otherwise not required. Now, subject to such conditions and restrictions as may be prescribed. Now, by seeing this, what is that we can understand? A person who is a manufacturer can opt for composition scheme. And even a person who is making supply referred to in clause B of paragraph 6 of schedule 2, who is the supply of food. In schedule 2 paragraph 6 clause B, that is supply of food is mentioned. Restaurant service or supply of food, you can remember, service of supply of food, so they can go for composition scheme. So what is this? Supply of food. Supply of food. So they can opt for composition scheme. In service sector, only one. Who is that? Who is engaged in supply of food. Then in case of other suppliers, so 0.5% of the turnover in the state or turnover in union territory in case of other suppliers, which means that traders. So traders are covered. So here other suppliers referred to the traders. Traders are covered. Subject to such conditions and restrictions as may be prescribed. And now you will get a doubt. Sir, when these other suppliers you refer to, why can't service providers come? Why can't other service providers will come? See, other suppliers means, why we should take it as traders, we can also take it as other service providers. Now, I will come to that. Now, look into this. Provided further that, look into the second proviso, that's like amended. Provided further that a person who opts to pay tax under clause A or B or C, may supply services other than those referred in clause B of paragraph 6 of schedule 2 of value not exceeding 10% of the turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. So that is one point. Then apart from that, you should refer to section 10 subsection 2. Have a look into that. They have given certain restrictions to opt for composition scheme. Look into this, section 10 subsection 2, which is in page number 8.5. There, if you see, save as provided in subsection 1, that is 10 subsection 2 says what? The registered person shall not be eligible to opt, shall be eligible to opt if, save as provided in subsection 1, he is not engaged in supply of services. Now, what is that save as provided in subsection 1? As per subsection 1, they can render services which is supply of food, no doubt in that. Second, they can render some other services up to a limit. That limit is also given, up to a limit. Beyond that, they cannot render services. If they render services, they cannot opt for composition scheme. Shall be eligible to opt if, save as provided in subsection 1, not engaged in supply of services. So whatever is provided in subsection 1, that services they can provide, but otherwise they cannot, which means on interpretation of 10 subsection 1 and 10 subsection 2, when we use the word any other supplier, what does it mean? Any other supplier mean? Only a trader. Because which service is allowed under 10 subsection 1? Only supply of food, or up to a particular limit you can render some other services. What is that limit? How to calculate that limit? Again, look into that second proviso. Provided further that a person who opts to pay tax under clause A or B or C may supply services other than those referred to in clause B of paragraph 6 of schedule 2 of value not exceeding 10% of the turnover in a state or union territory in the preceding financial year or 5 lakh rupees, whichever is higher. Now that 10% should be calculated on aggregate turnover illana turnover in a state or union territory. Should it be calculated on aggregate turnover or should it be calculated on turnover in the state or union territory? It should be turnover in a state or union territory. It should be turnover in a state or union territory. It is not the aggregate turnover. Don't forget that point. So 10% of the turnover in a state or union territory or 5 lakhs, whichever is higher. There is a logic behind this, whichever is higher, that 5 lakhs point. Because you, first of all, what is the need of this proviso here? What is the need of this proviso? If I say a supplier of service other than restaurant service or supplier of food cannot opt for composition scheme. That was the previous case. A supplier who is making supply of service other than supply of food cannot opt for composition scheme. If that be the case, it was there, previously it was there. Then a manufacturer who is doing after sales service cannot go for composition scheme. A trader who is doing delivery services cannot opt for composition scheme. So then literally composition scheme is of no use. Therefore, the objective behind this amendment is that whenever you are engaged in supply of goods as a trader or manufacturer, you will be rendering some incidental services. You render that incidental services or any service you render, but there should be a limit in that. What is that limit? Up to 10% of the turnover during previous year. For example, previous year my turnover is 120 lakhs. Turnover is 120 lakhs. 10% will be 12 lakhs or 5 lakhs, whichever is higher I should be taking. What if I don't have any turnover during the previous year? 0. Then 0 into 10%, 0 or 5 lakhs, whichever is higher. At that time also I can render services up to 5 lakhs. That is the logic behind this. Then, so previously it was like a removal of difficulties order, but now that they have merged into the section itself, so therefore it is given as second proviso to section 10 subsection 1 with effect from 1 to 2019. Then thereafter we have explanation to section 10 subsection 1. Explanation to section 10 subsection 1. This 10 subsection 1 has got one explanation. See that. For the purpose of second proviso. What is that second proviso? Just now we discussed, na? That is up to a limit they can render the services. What is that limit? 10% of the turnover during previous year or 5 lakhs, whichever is higher. And for the purpose of second proviso, the value of exempt supply of services provided by way of extending deposits, loans or advances in so far as the consideration is represented by way of interest or discount shall not be taken into account for determining the value of turnover in a state or union territory. What is this? Read that carefully. For the purpose of second proviso, the value of exempt supply of services provided by way of extending deposits, loans or advances in so far as the consideration is represented by way of interest or discount shall not be taken into account for determining the value of turnover in a state or union territory. So, for determining the value of turnover in a state or union territory, what does it mean? It means that here, under this second proviso, you have a limit. What is that limit? 10% of the turnover during previous year or 5 lakhs, whichever is higher. Up to that limit, you can render the services. Now, when you are rendering these services, even that could be taxable services or exempted services, both there is a limit. Please check. Provided further that a person opt to pay tax under clause A or B or C may supply services is the word used, not taxable services. May supply services is the word used, it is not taxable services. May supply services of value not exceeding 10% of the turnover in a state or union territory in the preceding year, which means that services includes even exempted services. That services is not just taxable services, that service includes even exempted services. But if that exempted services is by way of interest or discount, that is loans, advances or deposits and interest or discount, then it will not be considered in that limit. Okay, now there is another interpretation also that is possible here. You may say, take the previous year turnover, and because turnover in the preceding year, take the previous year turnover, take out the interest income, and on the balance you calculate 10%. So that is not the meaning, because if that is the meaning, they should have given the explanation while computing the turnover. But see, for the purposes of second proviso, for the there. So in that second proviso, what is the value? Called as a limit. What is the value? Called as a limit. So for that purpose, you should not consider this interest income. So that is the correct way of interpretation of this year. That is, you take the turnover, that is normal turnover. Sir, in the turnover, should I take interest income or not? We'll get it out. I will take the previous year turnover. In the turnover, should I take interest or not? That is turnover in a state or union territory. Should I take interest income or not? Now, for that reason only, I have given the explanation to entire section 10. See, this explanation 1 and explanation 2 section 10 is entirety, not just for 10 subsection 1. This is applicable for entire section. So if you look into explanation 2 to section 10, explanation 2 to section 10, for the purpose of determining tax payable by a person under this section, the expression turnover in a state or union territory shall not include. Turnover in a state or union territory shall not include value of following supplies, namely, that first point not relevant here. Second, exempt supply of services provided by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. What does it mean? Previous year, you take turnover to determine the limit. In that turnover, don't take the interest income at all. Don't take the interest income at all. Clear? Don't take. And now you compute the turnover, multiply with 10% or 5 lakhs, whichever is higher. First. Then, current year, you are rendering some services. When you render that services, check what is the value of that limit and the service you have rendered. While doing this comparison, don't take the interest income that is rendered during the current year. So this you will understand only when we see this with the help of some illustrations. So that we will discuss. Now theoretically we have just made this. Let's look into the further analysis. Analysis of section 10 subsection 1. When a person can opt for composition scheme, if the aggregate turnover of that person during the previous financial year does not exceed 150 lakhs, then such person can opt for composition scheme during the current year and he will pay tax at the concessional rate. Whereas in case of 8 states, that is this we would have discussed this we discussed in registration chapter. So these 8 states are Arunachal Pradesh, Mizoram, Meghalaya, Manipur, Tripura, Nagaland. So and even Sikkim. We have 7 northeastern states. Assam is not there. Instead of Assam, we have Uttarakhand. So for these 8 states, instead of 1.5 crores or 150 lakhs, both are same here, 1.5 crores or 150 lakhs, we should take 75 lakhs. Is it clear? Then, whether registration is required for a person opting for composition scheme? Yes, registration is required for a person who is opting for composition scheme, because clearly the words used there is a registered person, which means whenever they cross the threshold limit, they need to register and then only they can go into composition scheme, and we have an advantage there here. Whenever you make an application for registration itself, there you can select that you want to opt for a composition scheme. You have that option and you will select. So there is no need to separately make application for composition scheme. First you need to register and then make an application for composition scheme. Not required. Along with the making application of application for registration, you can opt for composition scheme. What is the meaning of aggregate turnover for determining the eligibility of composition scheme? In this regard, we need to refer to explanation 1 also. In section 10, we have 2 explanations. Explanation 1 is for meaning of aggregate turnover. Explanation 1 is special point for aggregate turnover. Explanation 2 is special point for turnover. What is it? Explanation 2 that we have discussed, we discussed that we should not take interest income. That's what we discussed in explanation 2. Now looking into explanation 1. For the purpose of computing aggregate turnover of a person, for determining his eligibility to pay tax under this section, the expression aggregate turnover shall include value of supplies made by such person from the first day of April of a financial year up to the date when he becomes liable for registration under this act, but shall not include the value of exempt supply of services provided by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. So it includes one, it excludes one. What is the meaning of aggregate turnover? We discussed it long back. In taxable event itself we discussed. What is the meaning of aggregate turnover? All 4 supplies will come in aggregate turnover. Taxable supply, non-taxable supply, exempted supply, zero rated supply, everything will come, and it excludes 2. What are they? Inward supplies on which GST is payable under RCM should not be taken in aggregate turnover, because inward supplies purchase will not go in turnover even though you pay GST on that purchase. Then next, GST will be excluded. That is the meaning of aggregate turnover. Now that's the standard definition of aggregate turnover. No change in that. You take that aggregate turnover and add one point they have given, and deduct another point. Now this is the meaning of aggregate turnover. Now I wanted to understand, I want to explain to you what is this. So what is included here? Shall include the value of supplies made by a person from the first day of April of a financial year up to the date when he becomes liable for registration under the Act, but shall not include the value of exempt supply of services provided by way of extending deposits, loans or advances insofar as a consideration is represented by way of interest or discount. Let's see this with the help of an example here. That is, previous year 2019-20, financial year 2019-20, a person commenced business on say 5/4/2019, commenced business on 5/4/2019, and this person's threshold limit is 40 lakhs. This person's threshold limit is 40 lakhs. Threshold limit for what? For registration. Threshold limit for registration is 40 lakhs. Threshold limit for registration is 40 lakhs. Now he commenced business on 5/4/2019 and up to 30/11/2019. Up to 30/11/2019, his turnover was 40 lakhs. Up to 30/11/2019, his turnover was 40 lakhs. His turnover was 40 lakhs. Then thereafter, the turnover exceeds 40 lakhs. So which means he is liable to get registered from 30/11/2019. Liable to get registered. That is, for financial year 2019-20, the threshold limit is 40 lakhs. This is for registration. He commenced business on 5/4/2019. From 5/4/2019 till 30/11/2019, the turnover is 40 lakhs. So on 30/11/2019, the turnover crosses 40 lakhs, means he is liable to get registered on 30/11/2019. Up to this date, 31st March 20, up to 31st March 2020, he made a turnover. And that turnover is 120 lakhs. That turnover is 120 lakhs. Now, what is the turnover 120 lakhs? The breakup I am just giving. taxable supplies rupees 100 lakhs, taxable supply rupees 100 lakhs, exempt supplies in that interest income. In exempted supplies we have interest income 5 lakhs and other exempted we have 15 lakhs. This is the breakup. Now again I am repeating, have a look into this. First, for financial year 2019-20, the threshold limit is 40 lakhs for registration and he commenced business on 5/4/2019 and the turnover up to 30/11/2019 is 40 lakhs. That is a threshold limit, and with effect from 30/11/2019 that person is liable to get registered. Thereafter, up to 31st March 2020, the turnover is 120 lakhs. What is the breakup of the turnover? 120 lakhs. Taxable supply 100 lakhs, exempt supply 20. In the 20, interest income is 5 lakhs and others is 15 lakhs. Now, the question is, can this person opt for composition scheme during the current financial year 2020-21? Can the person opt for composition scheme? Can the person opt for composition scheme for financial year 2020-21? Can he opt for composition scheme for the financial year 2020-21? What is your answer? This person can opt for composition scheme only when the aggregate turnover does not exceed 1.5 crores or 150 lakhs. So now we need to compute aggregate turnover. While computing aggregate turnover, we need to take turnover that is taxable as well as exempt supplies. That's regular. We take turnover. Now my question is, from 5/4/2019 to 31/2019 he made a turnover of 40 lakhs, assuming this turnover is taxable turnover. Sir, when it is taxable turnover he should have registered? No, need not be. It is a taxable supply. But up to 40 lakhs he is not required to pay GST and he is exempted from registration. He is not required to get registered. So therefore 40 lakhs we need to count or not is a question. We need to count. That is what explanation 1 says. What does explanation 1 says? See that. While computing the aggregate turnover, it shall include the value of supplies made by such person from the first day of April of a financial year up to the date when he becomes liable for registration. So in our illustration, from 5/4/2019 till the date he becomes liable to get registered, some turnover is there, you count it. So 40 lakhs should be counted. Plus we have another turnover 100 lakhs. Count 100 lakhs. Taxable turnover should be taken. And next, exempt turnover, please see what is the point given. But shall not include the value of exempt supply of services provided by way of extending deposits, loans or advances. So interest income will be excluded, which means that only 15 lakhs should be taken. We should not take 5 lakhs. Interest income should not be taken. And when we add these three, how much it comes to? 40 plus 100 plus 15, that comes to 155 lakhs. Therefore it exceeds 150 lakhs. And whether this person can opt for composition scheme? No, this person cannot opt for composition scheme during the current year. Now we understood the aggregate turnover impact here. So what is that? Aggregate turnover includes all turnovers, but it excludes interest income only. That is, exempted supply also will come in aggregate turnover, but interest income should be excluded. And then one more point, what is that? From the beginning of the financial year till the date that person is liable to get registered, even that also should be counted in the turnover, because there was another view. anyhow that person is not required to register at that point of time. So we need to take turnover only from the date he is liable to get registered. If that be the case, 120, so out of that 120, 100 taxable and 15, so 115, definitely he is eligible for composition scheme. So we should not take that alone. Even the turnover from the date he commences a business till the date he is liable to get registered, that should also be taken into consideration for determining the eligibility of the composition scheme. This is as per explanation 1 to section 10. Understood? Next. Then that is what I have just explained here. What is the meaning of aggregate turnover for determining the eligibility of composition scheme? Aggregate turnover will be computed on the basis of turnover on all India basis and will include value of all taxable supplies, exempt supplies and exports made by the person with same PAN, but would exclude inward supplies under reverse charge as well as central sales or union territory and integrated taxes and cess. See, this thing is the general meaning of aggregate turnover. That's the general meaning of aggregate turnover. Even though consideration represented by way of interest or discount on deposits, loans and advance is exempted service, it will not be considered for calculating aggregate turnover. That's what we have seen in explanation 1 to section 10. Also, aggregate turnover shall include the value of supplies made by such person from the first day of April of a financial year up to the date when he becomes liable for registration. See, when you read, you don't have to read the bare act. You don't have to read the bare act. You can start with this analysis and you can read. But for explanation purpose, I have just given the bare act because you should also learn how to interpret the act for that reason only. And when you read it, you can read it from the analysis part. Then, what is the rate of tax for composition scheme? This is based on section 10 subsection 1. Some rates are given along with some other notifications. If the registered person is a manufacturer, they need to pay GST at the rate of 1% on total turnover. Here the 1% will be CGST 0.5% and SGST 0.5%. Whereas, if the person is a trader, it will be 1% of the taxable turnover. Don't forget, taxable turnover, that's the difference. Taxable turnover, it is not on the total turnover. A trader is required to pay GST on the taxable turnover. If you want, you look into there, 0.5%, but this is based on the notifications here, it is not here. So here it is used as turnover only, but based on some other notifications. So it is given this way. So it should be taxable turnover in the state or union territory. Whereas a restaurant service provider, it will be 5% of the turnover in the state or union territory.